The Ministry of Human Resources has opened 19 investigation papers against 6 companies related to Top Glove Corp. This follows enforcement operations in Perak, Kedah, Kelantan, Negeri Sembilan and Johor amid the spread of COVID-19 in the Teratai cluster, Malaysia's biggest since the start of the outbreak here. In a statement, MOHR pointed out that Top Glove's main offence was its failure to apply for an accommodation certificate from the Department of Labour of Peninsular Malaysia. This led to the discovery of other offences, including dense accommodations and dormitories, which were uncomfortable and poorly ventilated. MOHR said the Department of Labour will take further action for all offences investigated under the Workers' Minimum Standards of Housing and Amenities Act 1990, Act 446. If found guilty, the companies are punishable with fines of up to 50,000 ringgit per offence. The news sparked selling pressure on Top Glove. Its share price fell 4.6% today to close at 6 ringgit 79 cent. Mohd Rani Hisham Samsudin is back at the helm of KTMB effective today. Previously its CEO from 2017 to 2019, he's now taking over from Datuk Kamaruzaman Zainal, whose term ended yesterday after just over a year on the job. The MOF entity did not give a reason for Kamaruzaman's departure. During his absence from KTMB, Mohd Rani was the CEO of Container National. He has over 23 years of experience in transport and logistics, having worked in organizations including Post Aviation, Senai Airport Terminal Services, MISC Trucking and Warehousing, and KN Logistics. The Edge Malaysia reported on August 12, 2019, that Mohd Rani was leaving KTMB following the expiry of his 2-year contract in September that year. His departure came in the wake of a poison pen letter sent to the MOF, accusing him of wrongdoing. An internal audit has cleared him of any misdeeds. S&P Global Ratings says Malaysian banks have proven their durability by demonstrating resilient credit portfolios as they transition out of the blanket 6-month loan moratorium. In a statement today, it noted that repayment rates for major banks' retail and SME portfolios have significantly improved since October. On average, it said the proportion of the loan book that requires further repayment assistance has dropped to 8 to 13% for the local banks it rates. This is from 70 to 80% in the initial phase of the moratorium. But the credit rating agency warned that the initial recovery of repayments may end up being an unreliable indicator, since the industry only has repayment data for 1 month. As for the additional 3-month moratorium offered to all bottom 40% income earners and SME borrowers, S&P Global Ratings believes this will only marginally affect Malaysian banks' asset quality, given that the B40 segment makes up only 10 to 20% of loan books. It kept its forecast of 15 to 20 basis points net interest margin compression for 2020. The FBM KLCI swiftly rebounded today on strong bargain hunting, reversing almost all of yesterday's losses after a sharp 11th hour sell-down. The benchmark index closed 39.55 points or 2.53% higher at 1,602.26. It had risen nearly 40 points within the first 1.5 hours to breach the 1,600 level. TA Securities Holdings Senior Technical Analyst Stephen Su said external factors such as China's manufacturing sentiment that hit a decade high and the acceleration in vaccine development triggered the optimism in the market. He also told theedgemarkets.com that yesterday's sell-down was overdone and exaggerated. Going forward, Su said the market trend will continue to be choppy and see more vaccine and recovery play. He sees the KLCI's resistance levels at 1,618, 1,650 and 1,680, and the support levels at 1,562 and 1,546. Overall, 9.19 billion shares worth 5.35 billion ringgit were traded today, with gainers outpacing laggards by 760 to 479 and 432 counters remaining unchanged. Among KLCI constituent stocks, Petronas Chemicals led the pack, closing 9.35% higher at 7 ringgit and 2 cents. This was followed by Tenaga Nasional, which closed 7.74% higher at 10 ringgit 86, and Axiata Group, up 6.48% at 3 ringgit and 78 cents. Vision Holdings is buying 51% of a company that makes medical devices and products, including surgical gloves, for 5 million ringgit. In a bourse filing, the company announced that the deal was inked between its unit VIP Index and SSN Medical Products Ang Teck Leong, Lim Kiat Yi and Ravendran Utrapati. It will be funded through internally generated funds. The deal has a profit guarantee, where SSN must ensure that it achieves a profit before tax of no less than 15 million ringgit for FY21. Vision expects the proposed acquisition to provide a steady stream of revenue to the group. With demand for gloves expected to remain robust, Vision Managing Director Dato' Ng Aun Hui says the group aims to triple its glove production volume from the current 500 million pieces to 1.6 billion pieces per year within the next 18 months. SSN makes both latex and nitrile medical gloves, latex condoms, as well as specialty gloves, such as elbow-length medical gloves. About 80% of its products are exported, mainly to the US, Germany, China, and other European countries.